Hi there. In this video, I would like to show you a new live position recording that I finished last week. My name is 𝗹𝗲𝘃𝗲𝗹𝘀 and I'm the Chief Options Expert at Tanuki Trade. This position was about the put ratio spread for Amazon before the earnings. This is the candle where I opened the position before the earnings, and here you will see a significant drop in Amazon because of the negative earnings reaction. And you will see in the recording that I closed half of the position after the market opened and then the rest before the market closed for a 295 profit. You will also see how the put ratio opened up because of the significant implied volatility crash and the market bouncing back from the 200 put support. So let's continue with the live position management. In this video, I would like to show you a new position that I have just opened for Amazon. And this is a pretty speculative play because earnings will come around after market. And as you can see, the implied volatility has been rising steadily, which is not coincidence because implied volatility always rises leading up to earnings. And right now what we can see that there is a huge gap down. This candle is actually today's candle. If we zoom into it, you can see that it's right on the HVL line, and this is a pretty big doji. It's coming back from the 200 moving average. And right now the put support is still down and the core resistance is pretty up. So the speculative play is that I opened the put ratio spread, which has a break even of this gap fill. So this around this area is the break even, pretty far. Here's the concrete option strategy on 𝗹𝗃𝗃𝗀𝗃𝗃 Analyze. Here you can see that I bought 210 and shorted 205, and the ratio between them is 2 to 3. So this is not a regular put ratio, but a different ratio that I mostly use, the 2 to 3 ratio. And here we can see the break even around 193-ish. So actually this is the break even here, below the general put support and below every put wall. So I think it's pretty safe, quote unquote pretty safe, because it's never safe to play with a put ratio. So if you don't know what you are trading with a put ratio, never trade a put ratio. You can trade a put ratio safely if you have cash secured money in your brokerage account, because if the market goes against you, for example, if the market tanks and I have to buy Amazon, then I need to buy it for 205. And since the ratio is 4 to 6, which is 2 to 3, obviously, then if everything is assigned to me, then I have to buy 200 shares of Amazon. And if you don't have the money to buy this, then it could create a margin effect. So if you want to play like put ratio in a safe manner, then you should do it with like a cash secured way, that if it's assigned, you can buy it, hold it, and maybe implement a veer strategy around it, covered calls, stuff like that. It's a different topic. But if you don't know how to trade put ratios, never trade put ratios, because these are naked positions and risky positions. If there is no money left in your account and will be assigned, then you will be margin called and the position is closed in a pretty big loss. So for example, if Amazon opens down here, then that's an immediate loss. But if you have money to buy Amazon and can sit into it, it's still a loss, but at least you are not liquidated because you have the money. That's why it's called a cash secured put. So this is the way I opened it. And here is the screenshot of my fear. This is a screenshot from Interactive Brokers. Here you can see that the buy side is the 210 put and the sell side is the 205, and here are the ratios 2 to 3. And it was filled for 120 as a credit. This is it. So you can see it in 𝗃𝗃𝗃𝗃𝗃, and we will track the position from here. And if I click Analyze Opposite Trade, I will always see the current price of the strategy. Right now, what I also can see is that the current market price is here, and my delta is 19. So this trade has obviously positive delta. This T+0 lines also tells that. And we also have positive theta and negative vega. Negative vega is important because I am expecting, or everyone is expecting, implied volatility to fall. So negative vega is very good if implied volatility is falling. So if the market, for example, like opens up here tomorrow, this T+0 line will gravitate back, might gravitate back towards the zero line, because it's February 20 and it's not very far ahead in time. So this is how the position looks like right now. I will continue from here. It's Friday and we can see a huge gap down in Amazon. Right now the 200-day put support is below the price. It's coincidentally with the technical support around this level here, and the market bounced back from it. And right now the implied volatility has been falling since the market has opened. And let's see how the position is doing. Here's the position that looks pretty good despite of the fact that the market gapped down, and it's because implied volatility has been crashing since the market has opened. And right now what we can see is that this is around $200 profit, and I closed half of the position for 0.05 debit. Remember, I sold it for 120 credit, so I just left a little risk on the table. So half of the position is already closed, and here's the screenshot from my Interactive Brokers account. It was closed a couple minutes ago, and what we can see is that the closing price was 0.05 minus in Interactive Brokers. So this is what happened. And right now I still have a very, very wide break even wider than before, because I closed half of the position. It's around 193 or something like that, and right now we are in a very positive theta and negative vega position, but still positive delta, and delta will be negative with time until expiration. And right now what I would like to do is still sit in this position and see what next week will bring, because if it's going up then it's still better because I have positive data. If it's staying around this area, positive data will kick in and have the position. And also if implied volatility starts to fall or continues to fall, that also helps the position because of the negative vega component to it. So right now this is the only change I did to the position. I will continue from here. It's still Friday and I decided to close the other half of the position because Amazon jumped back to the previous support. This was a previous support level in here, and Amazon tested this again today, and there was a very nice opening up of the position. Here you can see the position, how it opened up. It was a very quick repricing of the Amazon put ratio, and you can also see how implied volatility has been falling since the day started. So I decided to close out the other half of the position for 60 cents, which is pretty good compared to the maximum profit it could get in 2 weeks. The February 20th is 2 weeks away, and right now from what I can tell, usually these are the max profit that I look for. It's like 30% in 1 day. So I'm measuring this distance and I made like this, so it's like 30 or 35%, and this is a very nice return on invested capital in 1 single day. So that's why I decided to close it down, and the final profit became $2.95. Let me show you the fear from my live Interactive Brokers account. It was filled an hour ago, and that's why the whole position is closed now. So that was a very, very quick position, and it made money because implied volatility crash and the market stayed around the tent or in the area. If you look at the area here, it stayed in the tent in the profitable zone, and implied volatility has been crashing. So whenever there is a high implied volatility crash, these kind of strategies can open up very quickly. This is what you have seen so far in this video, because I only opened this position yesterday as it was depicted in here. So this is a pretty quick profit. I hope you learned something new from it. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.